With me on the line now, Sam Catalano from Capital Network. Sam, good morning. Nice to speak to you.
Good morning.
Sam, we're talking Berkeley Energia. And first off, of course, for those watching, click on the eye in the top right-hand corner of the screen for Sam's full report. So Sam, Berkeley Energia, tell me a bit more about them and their main project, Salamanca in Spain.
Yeah, correct. So Berkeley Energia, it's a London AIM and an ASX Aussie-listed minerals development company. The company, as you mentioned, is developing the Salamanca uranium project in western Spain and hoping to commence production in the second half of next year. The asset looks like a low capex, low operating cost asset. It's in a region with extensive established infrastructure, with strong community support for the investment. Once they get it up and running, it should see them entering the top 10 global uranium producers in the early part of next decade. So a meaningful operation. Exposure to uranium as well at the moment, I think, is an attractive place to be for investors. It's a commodity which has had very little investment into new capacity over the past sort of 7 to 10 years. And on the demand side, you've got a number of restarts of reactors in places like Japan following the Fukushima tsunami in 2011, I believe it was. You've also got a number of new reactors being built in China, which will need to source their uranium somewhere. So the demand thematic is coming through as well. So a strong asset in a strong region, in a commodity which hopefully should be seeing increasing demand.
Well, let's talk a bit more about the economics of the project itself, the numbers. How do they stack up, Sam?
Yeah, sure. So look, as I run through the numbers, the project looks very attractive. The company has recently signed some offtake agreements for part of the potential production at around $42 a pound for the uranium. If I run those sorts of numbers through a model, it suggests a total asset value of just shy of $500 million US dollars. Now that compares with the current market cap of the company at around $170 million. So quite a considerable bit of upside to the asset valuation. I'm not thinking about financing costs just yet. If we look at the potential free cash flow generation using similar numbers, we could potentially see upwards of 50% per annum free cash flow yield from this asset once it's up and running. So there are very attractive potential numbers there for investors.
And in terms of the all-important financing, of course they announced this deal recently for $120 million with the Sultanate of Oman.
Yeah, that's correct. So look, I think this is a very savvy deal. I mean, obviously, any junior minerals exploration company, one of the big question marks is how they're going to fund and finance and construct the operation. On my numbers, Berkeley Energia did need sort of around that $120 million worth of capex to make sure that they could confidently develop the asset. They've managed to sign this deal with the Sovereign Wealth Fund of Oman to raise that $120 million. I also think it's a very smart deal in that they've managed to sign it as convertible loans, and the prices that it will convert to equity at are at significant premiums to prevailing share price, certainly before the deal was announced. And what that means is they've managed to raise $120 million, but potentially only for about 37% maximum dilution, as compared to 170 million market cap. So they're a very attractive financing package. They shouldn't need to raise any more funds materially from elsewhere. So you basically got a company with a strong, simple asset with great economics, fully funded, bringing production into a commodity that should be well sought after. So a very interesting stock for investors to consider.
Good to get your insights, Sam. Thanks very much.
Thank you.
And don't forget to see Sam's full report. You can click on the eye in the top right-hand corner of the page.